we could still see rates fall just because that gap's going to continue to shrink. So this is good news for anybody that's been waiting around for lower rates.
Hello, everyone. Welcome to another Mortgage Minute. My name is Matt Thomas. I'm joined by local lender and legend Brian Dewald. Brian, how you doing today?
I'm doing well. How are you? Good to see you.
Good. First time I called you a legend on this, but I thought, why not?
I'll take it, man. I'll take it.
This is not news. I've heard that the kids call each other legends, and I think that they haven't reached that status. But you, my friend, you have reached it.
I'll take it, buddy. Thank you.
Hey, so it's interesting how you can go for 4 or 6 weeks and really not a lot happens, even if the rates fluctuate here or there. You know, it's oftentimes it's just a minimal little blip here or there. We have literally had some pretty amazing things happen. The first one, probably of biggest note, is the fact that rates on Friday dipped to below 6%. That is, of course, the going rate. Of course, you have to qualify for this rate and all these other things. But it's not a gimmick. It was just the going rate, 5.99. Today is right there, I think just slightly above 6% as rates obviously fluctuate. But there's obviously some interesting news that's causing this. We've got some interesting things happening at the Fed. I hate to say politically driven things are arguably that are happening with the Fed on the DOJ. There are things going on in the labor and job markets. Gosh, what else? I mean, there's just all kinds of drivers.
Inflation,
but here we are at the beginning of the year and lots going on. Brian, let's start out with the news of the Trump and $200 billion in mortgage-backed securities. What are we talking about there, and how does that affect the everyday home buyer?
Pretty wild that this came out. I don't know this for sure. I tend to think, when we see big news like this during a midterm election season, I think that there was probably going to be a move somewhere, somehow from the government to push towards that, that midterm. Came a little earlier than I expected for sure. Trump's calling for Fannie Mae and Freddie Mac to dump $200 billion into mortgage-backed securities. So this is cash they already have on hand in short-term treasuries. He's suggesting they put it into long-term treasuries. And if that happens, it'll be good for mortgage rates. We saw just based, and this happens often, where we just hear commentary from somebody, good or bad or indifferent. It could affect the market. And we saw that late Thursday and into Friday, where when this news broke, the markets responded very positively. And we saw the lowest rates really in 3 years or more, is what we ticked at the end of last week. So, the news over the weekend wasn't fantastic just in terms of the subpoena to Jerome Powell. So that and other factors are making the markets go a little bit in the other direction today. However,
that hasn't been a big drastic swing though.
No, not yet. But it's, the end of the day, I'm seeing some lenders reprice for the worst. So, we'll just kind of see how it goes. Tomorrow's CPI, which is inflation, it's the biggest one that they look at. That could have a big impact on things. It actually, on the surface, predicting the future, that looks like that might be good news for us tomorrow. So we may rebound and gain back everything that we lost today. So that'd be good.
Okay. No matter what happens, and whether it's politically driven or not, the outfall, or if you will, the outcome is that, rates now are making things much more affordable. Brian, you and I talk about things in pipeline. It's just your purported business that you're kind of looking forward to. Tell us about your weekend.
I don't try to be readily available every Saturday and Sunday, but this weekend I just had to be, right? We had a lot of folks and families going to contract this weekend. All of them almost similar scenarios that are move-up buyers, right? They've outgrown their house. They decided to buy before selling. We can get kind of cute and creative. We've talked about that a little bit, but we can get cute and creative to figure out how to make that happen. So a lot of activity this week, a lot of larger price points, which is nice. I think the lowest price house we got under contract this weekend was $825,000. Lots of activity, just insanity. It was the busiest weekend I've had in over a year. So I'll take it.
It's interesting too. We actually, back in November, we filmed a Mortgage Minute that had a lot to do with, like, the focus of it was really just on the difference between, when you take take an average, you're like an $800,000 house, you take a price reduction of about $24,000. Do you either keep that price reduction, and how much does that help you as the buyer on a monthly basis? Or do you turn that into seller paid concessions on your behalf as a buyer? And then you end up actually are able to buy down your mortgage rate. The difference went from about $145 a month to about nearly $500 per month. And
Yep.
I actually kind of sat on that information and didn't publish it for a little while. Recently sent it out, and I've already had people asking questions about
Yeah.
that, coupled with the fact that rates are now like really close to six. And I think there's a lot of, I think that's going to spurn a lot of movement. Clearly, from what you're seeing in your own business, like there's actually been a palpable sort of uptick. Is that right?
Yeah, and we felt it even last week, right? It seemed like as soon as the new year rolled over, that people are coming out of the woodwork again. People are excited about real estate right here at the beginning of the year. So it's been a good couple of weeks so far, a week and a half.
Yeah, that's great news. Anything else impacting kind of where we're at rates wise? I know, you kind of alluded to the fact that the jobs report would kind of have some impact. Anything else that we need to cover related to that?
Yeah,
Were there specific
yeah.
notes you wanted to
Yeah,
share?
let me touch on this piece real quick. So, part of what I was reading when it talked about this quantitative easing, we've talked about that I think once or twice in the past, where at some form we saw this last during COVID when the Federal Reserve was pumping quite a bit more. They were buying anywhere between 40 and 50 billion a month in these mortgage-backed securities. Trump's proposal calls for 20 billion a month. So it'll help. I don't think we'll see rates in the threes, but what it's going to do is it's really going to help shrink. We've talked about this numerous times in the past. It's going to shrink and help continue to shrink what we call the gap, right? So it's the difference between the 10-year Treasury note and the 30-year fixed rate. And I put a couple notes together, and I've got a graph I can show you. This is really easy to find. September of 2022, the gap was 3.24%. In October of 23, it was 2.85%. It shrunk a little bit. I looked, just as today, it's 1.98%. So, chances are that this quantitative easing and this 200 billion that they're hoping to get into the market, again, 20 billion a month, that should continue to shrink that gap. So, even if things like inflation and jobs, which has a big impact in the mortgage world, as far as rates go, even if those aren't favorable, we could still see rates fall just because that gap's going to continue to shrink. So this is good news for anybody that's been waiting around for lower rates. Now, the bad news is the challenge, right, is that I was big into these concessions and everything last year, and I can tell you, one out of all of the contracts we got over the weekend, which were numerous, only one of them got concessions. So that might go away real quick.
Yeah, and I can see that becoming frustrating. That's the thing with, market dynamics. There's so many different things that might change, what your
Fast.
opportunities are from, day to day, week to week. It's interesting because we've had, typically towards the end of the year, people stop putting homes on the market. You see the
Yep.
inventory start to dwindle.
Yep.
First part of the year, while there tends to be an uptick, you're generally still recovering from basically some of the lower points of the year from an inventory standpoint. And a lot of times the
Yep.
inventory will continue to decrease into about February. We saw a remarkable amount of folks that were taking their house off the market because things weren't moving, things weren't selling. People were hanging on to, the reality is people were just hanging on to the wrong prices after things adjusted over the summer. And just as a result of the last couple of years with interest rates being high, we're going to probably see inventory start to hopefully pick up with demand as we approach the spring. There's inventory concerns. There's how much the sellers are willing to give in terms of concessions and things like that. The competition. I mean, if folks, you said that you had two buyers offering on the same house, just two folks that you were working with, is that right?
23 years in the industry, I've never had this happen. And I literally had the offers came into my email on the same property within 5 minutes of each other. Never seen that happen. It's wild. This
Yeah.
was a
So
particular house in Barker that was priced nicely, right? It was an aggressive price by the seller. They didn't shoot for the moon. Went on the market on Thursday last week, and they had 5 offers by the deadline yesterday. So it's
yeah,
that part's
I
big.
can't impress upon your minds enough. Like, when we say there's opportunities, but sometimes they change, and if you react to this news, this information that we're sharing, in a month or two, things might be different. It's part of the reason, obviously, we're here reporting on it as often as we feel like it's necessary to report what might be different in the marketplace. But with the inventory changing, rates changing, just the second that everyone decides to get off the fence and starts to buy, or it's just, hey, it's been a warm winter, and so maybe the spring starts a little
Yeah.
early. You know, all these types of things can add up, and next thing you know, you've got people feeling like there's some more competition. So what are the sellers going to do? The sellers are not going to offer as much in concessions. They might try to get higher prices, things like that. But there's a lot of things that are just going to change this from time to time. What I hope that people who are paying attention to these messages that we put out on a regular basis is that they're able to understand that if nothing else, talk to us, find out what the going opportunities are at the moment, right? Because those things change. And because we've got our finger on the pulse of what's going on, we can tell you from day to day, week to week, where are the best opportunities, whether it's taking advantage of the rates, finding concessions, buying when nobody else is buying, which can really be a sort of a coup, if you will. But as we move into the springtime, we may actually see competition pick up, which is very typical of a springtime conditions. Hopefully the inventory will rebound with all those folks taking their house off the market late last year. I would imagine that a lot of those folks are going to still want to try to sell again. So hopefully we'll see a return of inventory and things may balance out from that regard.
I hope so too. That'd be great.
Well, Brian, as always, appreciate your time, and we'll look forward to keeping everybody apprised of the next changes and new information. But as always, please do reach out. Make your calls early. We don't bite. We're happy to walk you through all these things and really just discuss your personal situation, find out where the best opportunities are for you. Until then, we will chat with you all soon. See you, Brian.
Good to see you.